Alright, so hello again. Here I am looking at the Morningstar Investing Classroom. Uh, so I'm going to dive deep into the market downturns and recoveries, especially after this couple video before, where I saw is the stay investment in the market section from the feature content module. Alright, so if we go back here, is this is the Morningstar Investing Classroom, where they show you is the featured content, stocks, funds, portfolio, bonds, ETF, and ESG, the environment, social, and governance. So okay, market in terms of recovery, because I saw that historical data makes a case for staying put rather than selling your investment. And also that especially for long-term investors, where they want is to see how the market performed, especially for long-term investments, historical data allows you to do that, and to expand a little bit more your vision and perspective, and also see that risk decline over time. So yeah, I look at the stock market contraction and expansion in the last 49 years, since 1973 to 2021. So yeah, that's actually 47 years. You know, it's not 49 years; it's 47 years. It's 47. It's 48. It's 48 years. It's 48 years. But well, I think that they round that number up. So you have 49 years. So this in this period they have been 10 market downturn. So what is a market downturn? Okay, and especially when did that happen on the stock market? This contraction phase that happened at the stock market cycle, a complete round in price fluctuation of a stock. These contractions are where the market value declined from its peak to 10% or more. That's the definition of a contraction. And then we have is the expansion. So it measured the recovery of an index from the very bottom of the contraction to its previous peak, and the subsequent performance in the subsequent performance of an index until it reached the next 10% decline, right? So there is several concepts here, like, okay, so what is a cycle? So yeah, it's a complete round in price fluctuation of a stock. In other words, it's like the complete round of a price of the complete round in stock price, a complete round of a stock price fluctuation. Okay, and these cycles may vary in length and duration. The other is okay. So now that we know what is a contraction phase and the recovery, but for example, what is a recovery? Okay, and actually, this is the recovery is the long upswing in price security following a long decline. In the term is used to describe is the upswing in nation's economy activity, or the boom in nation's economy activity. And the index, which is a statistical reference expressed as of investment expressed as a percentage, the idea of the index is to measure progress. So knowing that, okay, especially when you're going to look at this type of index, like Standard and Poor and the Wilshire 5000, where the Standard and Poor 5000 is measured as the uh, let me recap that because I barely know about that. Standard and Poor, it measures the from Investopedia. I would like that. That is my source. Investopedia. Okay. A prominent market capitalization. Here we go with the language. Explain our vocabulary. A prominent market capitalization weighs in index of 5,000 leading publicity trading companies in the U.S. A prominent. So yeah, a prominent market capitalization weight index of 5,000 leading publicity trading companies in the U.S. Okay, it's a market cap weight index, a market cap weight index of 5,000 leading publicity trading companies, whereas the Wilshire 5,000. Yep, where the Wilshire index is a broad-based market capitalization. Broad-based, and the other is market cap weight of the 500 top leading publicity trade companies. And this index, the Wilshire 5000 index, is a broad base. Well, what do you mean broad base? Yeah, what's the definition of broad base? A broad base index is designed to reflect the movement of a group of stocks for an entire market. Okay. Oh my god. Also called a market index. Okay. It want to. So it's designed to reflect the movement of a group of stock in or an entire market. So when you look at this broad-based index, is market index. It's also called market index. One of the broad-based index with few stock is Dow Jones Industrial Average, which has just 30 stock. One of the largest is the FT Wilshire 5000. Other example of broad-based index include the Standard & Poor's Index, the Russell 3000 Index, and the Nasdaq Composite Index. But again, these index are designed, or a broad-based index is designed to reflect the movement of a group of stock or an entire market. You want to see is the dynamic between that market. Okay. You want to see the dynamic, the movement of a group of stock or an entire market. You want to have the full view, broad-based, okay, full scope or zoom out of the market, of a particular market, or the whole market as well. Okay, so a broad-based index is designed to reflect the movement of a group of investment or a group of stock or an entire market. Okay, so for example of index are Standard and Poor, but one of the largest. It's funny because it's one of the broad-based index with the fewest stock is Dow Jones Industrial Average. It is funny because those index is broad-based. Okay, okay. Broad-based index. Okay, okay. Why I say okay so many times is because if you measure the 30 stocks And the wild chart, so the Dow Jones Industrial Average, the DGIA, it measured 30 stocks, and the wild chart measures 5,000, and the Russell 3,000. Okay. So again, the broad-based index is assigned to reflect the movement of a group of stocks or the entire market. Okay, that makes sense. So if you want to look at the group of stocks, you look at the DGIA, right? The Dow Jones Industrial Average. Okay, makes sense. However, if you want to have a full scope or an analytic view of the market, you may want to look at the Welshire 5000 index. Broadway index, Broadway index. Okay, interesting, 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 interesting. So what are the things that I have learned so far? Okay, okay. And it all counts because what we're talking about is what is an index, okay? And an index is, well, this is statistical reference that of investment reflected as a percentage in a period of time. The whole idea of this is to measure progress. Okay. Okay. The whole idea of this is to measure progress. Mm. Mm. Okay, so with this huge overview, all right, and when we talk about, for example, uh, 5,000 index, what was the last thing that I did? For example, on TikTok, because here I was explaining is on equity, which is the next concept of that broad-based index. Okay, so broad-based index. Hmm, interesting. Broad-based index. So they are index designed to reflect the movement of a group of stocks or an entire market. Those broad-based index. Okay. Mhm. Broad-based. How do you say that in Spanish? Broad-based. Uh, Largamente amplio. Broad-based. Uh, Basado en anchura. Capitalización de mercado de amplitud. Mm, Capitalización de mercado de amplitud. Mm, mm. Capitalización de mercado de amplitud. Okay, so well shot. So because I look at this, what is the contraction phase and the contraction phase and the expansion. So what is a contraction phase and what measures is a recovery, okay? Or what measure or an expansion measure is the recovery of an index, okay? From the very bottom of the contraction phase to its previous peak and the subsequent performance of the index until it reaches the 10% or more decline, right? So that's the whole idea of the index, is to measure progress, okay? Interesting here. So an index is to measure. So the idea of an index is to measure progress. So anytime you saw an index, I will argue that what they're doing is measuring progress, whatever they're measuring. Okay, whatever they're measuring. Yeah, whatever they're measuring. And then here is describing if so while some periods of decline have been severe, the market overall has grown with time. And here they're describing is, for example, what happened here in the 1990. Okay, from October. For instance, the stock market fell by 14.7% from its peak here at month end May 1990 to it is through in October 1990, but grew 355.1% from November 1990 to its next peak in June 1998. So this is the growth that it experienced, right? And again, this growth may have experienced by a lot of variable here. Perhaps they're printing money and they promoting this, a lot of the how do you say that, the policy, you know, for that, and then you reach a decline for that. And what it's doing is, well, measure that as long as your productivity increase, allegedly, bro, as long as your productivity increase and you align yourself with something that is already on demand, well, you might go well with that. You know, you might go well with that. So after I saw this, all right, and understand what is a contraction phase and expansion phase, and be able to articulate that, so when someone tells you, so hey, what is a contraction phase? I can tell them that is where the market stock value decline from its peak from 10 or more percent. Okay, especially if I'm gonna talk to someone in the field, right? Uh, and explaining also what is a recovery, in what is measured by recovery, or this expansion. I mean, what measures an expansion is the recovery of an index, according to Morningstar, from its very bottom contraction phase to its previous peak and the subsequent performance until it reached the next peak before another 10% decline or more. And also, well, understand what is an index, what is a recovery. So, a recovery is an upswing in security price following a long decline. And an index, and also the term recovery is used to describe is the boom of nation economic activity. And an index is an statistical reference of investment represent as percentage in a period of time. And the whole idea of this is to measure progress. And the most, let's say, prominent or more or example of index are the Standard and Poor 500 or the Wilshire 5000. And those index, all right, they are broad based, market cap. The Standard and Poor are for the top leading 500 companies, and the 5,000 is measuring or try to measure is the entire U.S. economy, right? So okay, then I look at the market downturns and recoveries. Okay, Now, here with the market downturns and recovery, okay, when I look at the historical data of the past downturns and recovery, can allow me to see the potential of the market performance. So there have been many US equity market downturns over time. And when you talk about equity here, as well, depend of the context here, it has several definitions. So equity is the total asset minus liabilities, okay? The net worth of a company, the amount of a company owns one's according to how much stock he or she has, is the amount of a company one owns according to how much he or she has. Okay, according to what I have or what I own on a company, that's my equity. Okay, it's a share of that pie from the company. How much stock he or she has. The value of a property minus it is liens. So when I look at this liens, okay, it's like, what is a liens? And liens is agravo in Spanish, of course. In Spanish is agravo. It says that it's enlaces, uh, but depending on the context in finance is agravar, gravámenes, liens, gravámenes, o embargos, which means uh, mortgage, no, holy, what? Oh my god, mortgage is. Um, no, but this is because you what yeah, well, exactly to English. Oh come on, man, for real? Mm, oh my god, translator. Oh, here we are. It's not bailout. What? Uh, an embargo. Yeah, really? Is that the word? That's a word? Okay, embargo. Uh, what? Seizure. Okay, seizure, distress. But I think there is another word in finance. I better remember. But in any case, it's a seizure. Okay. So yeah. So there have been many U.S. equity. The equity is the total asset minus liability. So what really left to you? Okay. An example of this is, let's say you earn $1,000, right? And your liabilities are your responsibilities, your the duty that you have. For example, with service, water, electricity, mobile data, and depend on where you live. It might also be um, uh, for example, if you live in a very cold place, you need some heaters, things like that. So there are all liabilities to you. And also it can be seen as when you share with someone how much value this person is providing, right? And by value, it doesn't mean it's acknowledged. It also can be seen as how much do I enjoy with this person, you know? Uh, uh, is another kind of measure. Uh, but the whole idea is that describe what is liability for you, right? For example, there are some people that when you share with them, they suck you all of your energy. It's like dementors. Whereas some other people, they make a expecto patronum. Too light is too, uh, it's too much for you that you say, well, okay, calm down, man, calm down. I know you are in your prime time, so okay, okay, we get it. Cool. So okay, so there have been many U.S. equity market terms over time, like this. Okay, there have been many U.S. equity for that. Uh, okay, so with this equity, okay, there have been many U.S. equity the total asset minus liabilities, the net worth of a company, the amount of a company one owns according to how much stock I have, okay, the amount of the amount of a company stock, the amount of the company stocks I own from it, okay, and the value of a property minus its lien. And when you mean about that's the reason why I'm looking here, liens, lines, lines, investment property lines. What? No, property line, lien. Home definition, lien. Ah, but this is home lien. Can you? Mm, no. Okay, here we are. Okay, lien. Does it pronounce that? Line. I think it's line. I think it's line, not lien. Line. Google transporter. It's a lien.
Liens.
Lien.
Liens.
Liens. Okay, liens. So lien or a lien, three main type of claim against an asset. So yeah, so a lien is a legal right to possess another property until a debt is repaid or an obligation is met. Mhm. So okay, okay, that's cool. So a lien. So a lien, okay, is a legal right to possess another property. It's a legal right. Who defines what is right? Anyway, uh, that's another topic for another video. So a lien, a legal right to possess another property until a debt is repaid or an obligation is met. Oh, okay, okay, okay. A lien, a legal right to possess another property. A legal right. It's a counter. So a lien is a legal right to possess another property until a debt is repaid or an obligation is met. So when we go back here and talk about that there have been many U.S. equity and the value of a property minus its liens minus the obligations you need to pay or the obligation on that. So what is your obligation? What is the uh, cost maintenance to have that property? Okay.
A lien gives a creditor the legal right to seize and sell property, then use the proceeds to pay off a borrower's debt. Usually the property relates to the purpose of the loan. For instance, Rhonda borrows money from a bank to purchase a new automobile. As part of the loan agreement, Rhonda will allow the bank to place a lien on the car. Should Rhonda default on the loan, the bank will repossess Rhonda's car, sell it, and then use the money from the sale to pay the loan balance. There are many different types of liens. A real estate lien secures payment on a mortgage. A mechanic's
hmm There are several liens. Okay. Oh, your obligations. Okay.
payment on a mortgage. A mechanic's lien secures payment for services performed on property. In fact, most service providers, from construction companies to dry cleaners, have the option of a lien in order to secure payment. Judgment liens are placed against property to secure payment in a legal judgment against a defendant to a lawsuit. The Internal Revenue Service uses liens to secure payment for delinquent taxes. It is usually used as a last resort after all other settlement and collection options have been exhausted. For large amounts, liens are a matter of public record. Filing a lien with the government lets the public know that the lien holder has an interest in the property and that the lien must be released before the owner can sell it.
Okay. That was quite a lot. That was quite a lot. But in any case, it's like that. It's like a lien is a right, okay, a legal right to possess another is a lease, a lien. A lien is a legal right to possess another property until a debt is paid or an obligation is met. Until a debt is paid or an obligation is met. Okay, a lien. And then he described it as a type of liens: bank lien, judgment lien, mechanic lien, real estate lien, tax lien. Mm, what does a lien mean? How do I get rid of a lien? Internal Revenue Service. How liens work? Bank lien, judgment lien, mechanic lien, real estate lien, and tax lien. Okay. So what I can summarize here is about lien and the definition of lien. Okay. Okay. hmm Okay. A lien or gravamen. Mm. Mhm. Okay. So with that, uh, I'll see you the next time. All right. Take care. Bye bye.